great companies all of a sudden has a change in earnings trend. What I'm saying is that these are often like an ocean liner that's charting a course. Again, in the book I make that analogy. The ocean liner that starts to turn, it takes a long time to redirect it. And so these great companies, like a RIM, okay, that all of a sudden had a big turn in their earnings, that was an indication that there was huge problems. Now RIM is an interesting story because the stock actually didn't really show us those signs of the decline in earnings until the price had fallen quite a bit. And that's also something that I believe is symptomatic of the kind of market that we're in. This is a market, we're in a bear market. It's a market that punishes companies that don't perform well. So the second that, I guess, the smart money gets wind that there are problems shaping up in a company, these companies get killed. And so RIM is definitely like that. Another example would be a company like Green Mountain Coffee. Green Mountain Coffee was trading at an extraordinarily high price and valuation and corrected very, very quickly. And so the stock went from like, I don't know, $60 down to $25. So these sorts of things do happen.
And you talk about that in your book in terms of when you're supposed to make a move? Or
yes. Yeah, there's some very clear rules about when to get out, when something's not working. I expose a concept in the book called a valuation reset, okay? An evaluation reset is when a company has traditionally traded in a zone, a valuation range, and when in fact it breaks that range, that's an indication that the market no longer believes that this company should be in that sort of valuation range that you're used to from before. And so I give you the parameters of how, what you should do in a situation like that. You know, how to behave, when to take a loss, okay, and when to sell and break even, for example. Okay, sometimes a stock, the price will come down sharply, like we saw in 2008. We saw a number of stocks get beaten up that were in fact excellent quality stocks. And I'll give you an example. National Bank went down to a fraction of what the current stock price is. And the stock, in fact, if you looked at the earnings per share, the earnings history of the company, it didn't miss a beat. So the earnings were as steady as could be. And there were other examples like that too. So the stock price was influenced sharply by the mood of the market. But these things all came back. So what I propose in the book, in Purple Chips, is not that this is a foolproof method that will eliminate any losses, because it can happen that you buy these stocks and that they will go down. But what I'm saying is that these fantastic companies, the odds are greatly in your favor if you buy excellent companies, and those stocks will recover in price.